looking back long term, whenever markets have been 3 standard deviations above long-term moving averages on a monthly basis. Now again, this is monthly. Those have not resolved themselves kindly in that process. I mean, here's what you need to know before the bell this morning. So let's talk about the market short term. We've got some bullish stuff that's going on. We've talked about this before. About this time last year, we were talking about what's called, it's a technical term called a cup and handle formation. And that typically is a bullish indicator if it resolves to the upside. And we had laid out some charts previously talking about this cup and handle pattern, and that it suggested markets were going to go higher into 2024, and that has certainly been the case this year. We're now seeing this once again. We have the cup handle formation, which is now complete because we now had a breakout to all-time highs. Now, what we need here is a successful retest of this pattern. So again, it's a bit early to say, oh yeah, it's definitely done, and now it's nothing but sunshine and rainbows from here on out. What we really need is a bit of a retest here, test this 20-day moving average, and then move higher, and that would help confirm that cup and handle pattern is complete. Now, historically, that suggests that markets should move higher. And again, a price target range for a cup and handle formation like this would put you around 59.30-ish, somewhere around there. So again, that's where that 6,000 number is coming from a technical basis. That's how you get to 6,000 from here is by the completion of this formation. But having said that, that doesn't mean you just go straight there either, because markets are getting very overbought here. We've had a very, very sharp run in stocks that's been nice. But consumers are getting, like I said, investors are getting very confident, bullish, kind of bullish allocations to stocks, et cetera, reaching very, very high levels. And again, that's just something that suggests that markets may struggle here a bit before they try to move higher into the end of the year. Now, having said that, though, there is a bigger concern here. And this is where, when we start talking about stocks from a longer term perspective, this is the one thing that we kind of want to pay attention to, because this is, now again, this is monthly analysis. So it's important to keep that into some type of context here. But looking back long term, whenever markets have been 3 standard deviations above long-term moving averages on a monthly basis. Now again, this is monthly. As we talked about yesterday, this moves very slowly, so it certainly doesn't mean that stocks can't go higher for several more months, because they certainly can. But when we have these very long extensions and big deviations from the long-term moving averages, those have not resolved themselves kindly in that process. I mean, we go back and take a look as an example, when we had similar situations. It was in the dot-com crash. We saw it again in the financial crisis. Of course, we saw it at the beginning of 2022 with the Russia-Ukraine invasion. And now here we are very similarly, very elevated on the MACD, extremely overbought. We don't have a sell signal yet, so that's why there's nothing to worry about here at the moment. Markets are going to continue to work their way higher. But these long-term monthly extensions, these deviations, are not sustainable long-term. Because again, just like everything, in order to have a moving average or whatever, you've got to trade both above and below that over a period of time. So a correction of some sort is eventually coming. But again, this is monthly. It could be 2 years from now before this occurs. But again, it's important to realize that markets are extremely deviated, which suggests that upside from here over the next year or two, however long it takes to get to a corrective process whenever it occurs, may be somewhat limited. So again, the ability to continue to move asset prices continually higher is going to become more challenging. These over the last couple of years, we've had some big 20% advances. It's been great. That is not abnormal, and particularly coming out of a correction like we did in 2022, in October of 2022. We were came down, test that long-term moving average, bounced off of that nicely. That was a very bullish pickup. That's why we talked about increasing allocation models, putting money to work in portfolios. It's been an excellent run from here, but we're now once again very deviated. So again, at some point, we're going to have to pull that back, reset the table for the next really good investing opportunity. It'll come, but again, we have to navigate that process when we get there. Anyway, just kind of a long-term aspect, short-term bullish, Longer term, a bit more concerning picture, but again, that takes a very long time to get there, so it's not something you deal with today. But that's what you need to know before the bell this morning.